So this morning we have 4 panelists with us. We have Todd Yoder, who's Managing Director of Global Strategic Finance with Fluor Group. We have Rodney Nilson, who's VP Product Management at Bottomline. We have Mitch Thomas, who's Head of Solutions Engineering at FinLync. And we have our own Craig Jeffery, Founder, Managing Partner, Strategic Treasurer. Thanks, gentlemen, for being here this morning. I'll try to take it easy on you. Just one item of note, just a reminder when we get to the speed round that you have to make a selection. It's one or the other. You can't say both. Just a reminder. So let's start out with technology changes and challenges. What are the biggest shifts or changes in technology over the past few years?
The changes, I mean, we could talk for a couple days about the changes in technology and the acceleration, right? So the difference between linear and exponential. So 10 linear steps gets you across the room, but 10 exponential steps gets you to the moon. I guess for a little fun to start off, and in honor of our friend Bruce Edlin, I have a prop. So of the hundreds of people out there, you don't have to, just by show of hands, how many people in their lifetime bought a music CD? Wow, that's nearly everyone. And how many of you bought a music CD within the past 12 months? We have one out of hundreds of people out there. So, yeah, so that is payments, right? And payment rails and methods for payments. So all the stuff that we're used to with wires and ACHs and global ACHs and RTP and you name it. All the stuff that we're used to, I think the new entry is DLT. Everyone refers to it, well, commonly referred to as blockchain, but really it's distributed ledger technology because there are ways to reach consensus and have anonymity and immutable transactions without actually using, quote, a blockchain. The thing that I'm really excited about the change is the super apps, right? So when you think of a super app, you think of Web.1, where, it's a read. We're all logging onto the internet back in, well, for me it was 1995, and you can read. It's kind of like Wikipedia of different businesses, and then we move into Web 2 that we're all used to, and it's more interaction and chat and a lot of cool capabilities. But then moving into Web.3 and more of these super apps, and so banking services, everything that we do. Web 2, is owned by these platforms, owned by the big money, right? And they have a lot of control, so they can cancel people like Craig and I if they want to. We've never been canceled, of course, but they have the power to do that. So the power is not in the hands of the people. And so as we go to Web 3 in the super apps, how many in Web 2, how many of you have over 20 passwords to log on to different platforms and services, right? I mean, and how many times a day do you use that forgot password clicker? With the super apps, it's going to be, we have one app on our iPhone or our Android or Samsung, and we log onto that super app, and then there'll be a bunch of developers building out micro apps, microservices, and so I think that's what we'll see. And then with Web3, I think we'll see multi-rail payments on the far side. So not the near side that we're going to see and use, but the far side. So the stuff that happens behind the scenes that we all want to be seamless, and it's really kind of boring. I mean, it's exciting for us, but not for 99% of the rest of the population to talk about the far side and the payment rails. But we just want it all to work, and we want it to work fast. So.
Wow, that was a great prop, by the way. I can't remember the last time I bought a CD. It's been a long time.
At least you didn't pull out a 5.25-inch floppy. I don't know how many people would raise their hand if you pulled that out. When I think about technology, I think that's fueled change over the past several years. I thought cloud computing is probably the biggest, or at least one of the biggest variables or triggers for change, right? It provided on-demand access, or it provides on-demand access to compute power, right? So that you can scale your apps in any way you need to. It provides on-demand access to data storage, so that you can do things like drive machine learning or data analytics. So again, in terms of change over the last few years, I was hard pressed to come up with something I thought other than cloud computing that was just a massive trigger for change.
I guess kind of in alignment with the super apps, I think what we're seeing is those microservices, the interoperability of those services, and being able to essentially offer the same types of functionality and things that treasury groups have come to really expect from like their TMSs and their ERPs and things like that, but allowing those companies to really focus and specialize in those singular areas, because in order to keep up with the technological change that we've been experiencing, there's nobody that's going to be able to innovate in all areas and be able to keep up and compete. So it's really dependent on those small niche companies to really power that super app and really drive the technology to be able to essentially offer those things, kind of next level connectivity, next level functionality, and what essentially treasuries are going to need to operate in the future.
Well, this has been a really good discussion around the changes that you folks see coming. And Craig, maybe you could hit on some of the challenges that you see for technology.
When you pulled out that CD and you mentioned the floppy drives, I was thinking Bernoulli drives and the giant albums, like who's ever bought a giant album? And I think that's indicative of things have changed rapidly. So what are the challenges we have? We have an explosion of data over multiple years, 40 to 45% growth in data every single year, which is a doubling every year, quadrupling every 4, eightfold. It just scales rapidly. That's one. We also have the ability to compute at scale. We have these services that you don't need to have a data center that has 15 servers, so many core processors. You can buy that and use it and scale up. And so what's the challenge is there's another shift, whether it's Web 3.0 or some other shift. We've moved from into the cloud with software as a service to fully scalable web native applications with microservices that are faster developing. So I think one of the challenges is how do we move and handle that change systematically? You want to move in one direction, but sometimes your infrastructure is not there. But what's changed if you look at banks moved from installed versions of software to the cloud, and they've expanded their capabilities rapidly. Tech firms have kept up, but it's hard to make the jump over each technological hurdle. But even looking at the ERPs, what's happened? Everyone who's on Oracle is moving to Oracle Cloud. People that are on SAP are moving to S4 HANA. They're all moving to more cloud native for the scalability. So the challenge is the infrastructure. The other is how do we handle information? Because information is the core, the food, the energy, the blood of our systems. That has to be handled. We have to handle that data. So in a system, in a process, there's the whole, I don't want to call it the streaming aspect, but the orchestrated movement of business processes across different systems. There's not one. How do you handle the open finance, open treasury, where it's API enabled and the workflow moves? Those I think are some of the bigger problems. The other is the mindset, keeping people moving forward with this change. We're in a period of great change, and not everyone's keeping up on what those changes are. How do you hire? How do you keep people developing? I think those are some of the challenges.
Thanks, Craig. Those are great comments and definitely complement what the other panelists had to say. And as we think about the next 5 years with technology, what do you see as being the most disruptive? And Rodney, we'll start with you this time.
Sure. I think it's actually building what some of the other panelists talked about that have led to change to date. I think it's only going to further increase, and that's really APIs, or really, I should say, externalized APIs. I think just about any modern application built today is going to have a set of APIs that's used internally. But I think externalization of those APIs for ready third-party consumption, I think that's really going to be, gasoline in the fire of super apps, for example. Right? All of a sudden, if I've got a standard way to acquire an account balance or to make a payment, right? You've got these fintech providers that can, build one set of integration, all of a sudden get massive scale versus have to worry about integrating to different points. So I really see, standardization, externalization of APIs as being just a huge trigger for change over the next 5 years.
I would agree with that. I think, continuing on that point, I think the availability of APIs across kind of the finance industry, beyond just banks is going to, really enable, all the folks in this room to really do their jobs better.
Yeah, in terms of changes, I mean, certainly APIs APIs are so different than they were earlier. Whether they were, legacy APIs, the internalized to externalized to API gateways that allow the coordination. Because I think the issue, maybe this is a bit of a context, is we're trying to move to end-to-end processing, digital. Anytime there's a break, there's a handoff, there's errors, there's defects. That wastes time, it wastes money, it makes it harder to know what we're doing. There's nothing good that comes from the physical handoffs. And so the more we can move towards the digital handoffs cleanly, the better it is. And yet when we look at AR, AP, it's 17% of companies have a mindset of end-to-end with their external partners, and 21% on the AR side. I may have that reversed. So there's a massive amount of room to grow. But that ability to exchange things digitally is one aspect for the business flow. And then there's the other side of how do we leverage that information for analysis and insight, whether it's for forecasting, fraud prevention, understanding where the business goes. I think that's the other opportunity.
Web 3 and it would be the most disruptive and the most unknown at this point. And just because currently, right, with Web.2, like I talked about, we all have these passwords. All of our data resides on servers of big companies with lots of money. And so as, and then the thing where I can sign on to this different website using my credentials from, let's say, my LinkedIn profile. And so basically I'm giving them permission to know everything that I do on this other website. And so it's not just the banks, especially some of these apps where they want access to your bank account, right? So they have all that transaction data. So by doing this, they can basically know every single thing I do, when I do it, how I do it, why I do it, and they own it, right? So Web3 is going to upend all of that, and it's coming. It's it's already here, but it's through decentralization and cryptography and zero knowledge proofs, and a lot of these technologies are making it so that these huge mega companies won't own all of our data. We will have control of our data, and you can think of it like a physical wallet that you have, where you may keep your driver's license, credit cards, pictures of your kids, that stuff migrated to the digital world in a wallet. All those important documents you have at home, that some of those you'd rather not have them in paper in a safe somewhere. You'd rather have them secure digitally with a seed phrase, as they call it, a password, so that other people can't access that, so you have some security there. But so I think Web3, just because there's so many questions, how's it going to come in? How's it going to, and what I'm really interested in and trying to find out this week is what different people's thoughts are on payment rails and how Web3 will interact with these payment rails.
Thanks. Great comments there. And given the challenges and the changes that we have, that we see out there in the market, how can companies position themselves best for this?
Yeah, I think similar to what we talked about earlier, as far as specialized providers really focusing on being able to figure out these new rails of technology, how to best utilize the data, and standardize that information, because all of the banks are innovating at rapid paces for all of our traditional rails when it comes to payments, ACH wires and things like that, and then they're adding curveballs in there like real-time payments, crypto type payments, and things like that. So for a corporate IT group, and we all know Treasury a lot of times becomes second fiddle, third fiddle to other parts of the organization, keeping up with that change from an IT technology perspective is almost impossible. So what we've kind of focused on today is decentralization. So finding those providers that can really specialize in that connectivity and simplify things from the corporate perspective, I think is critical for adoption for all of these new technologies.
I'd echo that sentiment. I think the parallel to me is right. I talked about cloud computing providing on-demand access to more capacity, compute power, storage. Similarly, I think the appropriate partner ecosystem provides on-demand access for organizations to consume technology and work that change into their business processes. So I'd completely agree. I think it's really important to have the right mindset that change is certainly ever increasing, and I think to try to go it alone is just too big a challenge. Having the right partner ecosystem, I think, is a big way to keep up.
Any different views on that, Todd?
I would just say, simple education. So for all of you treasurers and CFOs out there, getting up to speed on these technologies and the evolution in the market, because it's happening so quickly. And I know none of us want to hear this, but investing in human capital, so hiring diverse people from different backgrounds, hiring, obviously we want to hire really smart people, but maybe we don't want to hire people that look and act just like us with this huge treasury background, but people that have spent time in different parts of the ecosystem. And if you don't have them internally within your company that you can really leverage, hire them. Just spend the money and hire them. It's a smart thing to do, and the board and the CEO, they'll thank you for it down the road. But partnership and collaboration with your fintechs is going to be critical.
Being a consultant, I tend to be long-winded, so I would say strategy, partnerships, architecture, and mindset. And we talked about some of those already. So on the strategy side, where do you need to be? What are you trying to, what's the center of the chessboard that you're trying to occupy? What does your business need to look like? What does Treasury need to look like? Those are the core items that we all cover. They're table stakes. We all understand those. On the partnership side, I think we've talked about some of that. I'd give an example. What's happened. We needed a data lake. We had a lot of data from research. How do we set it up? Do we build a data center with backup drives? No, we provisioned in Azure. It was a blob, but it was it's essentially a data lake. In like a half hour, we just turned it on and it was ready to go. That's like, hey, you want to use a rideshare services? You download the app, and 3 seconds later, you're ready to go after you plugged in your payment information. It's like that would have taken weeks to get the servers to set stuff up and to make it work. But it was essentially clicking, provisioning through our Azure services, and we had a fully scalable blob. And so partnering with different firms, different banking partners that allow you to scale is one aspect. The other is architecture. Since tech is changing, it has to do with partners. Compute at scale. We've talked about those things already, and that allows massive ability to do what you need to do, which is processing transactions, figuring out the future with cash flows and forecasting, managing risks, leveraging the data. So the architecture, and the last is the mindset, which is it's what's been talked about before. It's like hiring people who will get you to where you need to go, training people that can be trained. And there's also people that won't stay up with stuff. every time there's a change, there's certain people that aren't outfitted well to make that change. And I'm not saying that to be harsh. It's that not everybody makes that change. There's probably other areas in the organization they can go to, but your abilities in finance and treasury, there has to be much more technical capabilities. Even though it's becoming easier using natural language search, you have to be able to see what can be done as we go through the change, because handling change and making change is different from keeping something running well. And there's a certain balance in an organization. So that acronym is SPAM. Or MAPS if you go the other way.
Thanks. That's nice. Great comments. Plenty of challenges, changes coming. It's clear to me that speed is going to be part of the process for people to adopt and adapt. With that, I'd like to move into a section called private and public. Given the changing structure and capital, PE's been taking a number of companies private. Is this part of a multi-year trend? And Craig, we'll start with you.
Yes, I would say it's definitely part of a multi-year trend. The PE firms are awash with capital. They're looking for good places to pour it into. We've seen, Bottomline acquired by, a very significant firm. I can never say the name quite right. And they've been acquiring a lot of other firms to put together a number of organizations to work well. And PE firms have a longer mindset than quarter by quarter. So they have capital. There's need and opportunity. I think we're going to see quite a bit of that more. They're not full of $50 million, $100 million. They're full of billions and billions of dollars, and they can put things together. So start of a trend. There'll still be a lot of new innovation, but it's definitely going to be several years of acquisitions by PE firms.
With that, let's transition over to Rodney.
Yeah, I'd agree. I think there is a lot of capital. I think it is something that we'll continue to see. Thoma Bravo, just to let you know, the firm that acquired Bottomline. But yeah, I think Craig's right. There's a lot of capital. There's a lot of opportunity to invest in assets. I think what we've seen in the market over the last 8-ish months, right? Obviously, we see valuations are a lot lower, so that can make price points a lot more attractive. So I would expect we're going to continue to see PE acquisition and some of these publicly traded firms going private.
So I kind of in a unique situation. I hear more discussions about taking private or acquiring. So I work for Fluor Corporation, but at the request of the chairman of the board of directors of Fluor, for over the past 18 months, have been co-leading taking a business that we own a majority stake in public called NewScale, which is small modular reactor business, which right now I think the world needs. But in the first small modular nuclear reactor business that can create carbon-free power that has been approved by the NRC, which is like a 16,000-page application. They don't take nuclear lightly. But so we took it public via a de-SPAC transaction, de-SPAC merger, and is now trading on the New York Stock Exchange as of May of this year. So raised $700 million in capital, $200 million private capital, and then another $5 on top of that. So the money is definitely out there. But I think, as far as moving forward, I think we'll see a lot more. It'll be a year of collaboration, a year to 5 years, a lot of collaboration, and a lot of these fintechs that are just dying to show off their science fair project. And so we'll see a lot of that. And so I think we'll see a lot of combinations, strategic alliances, partnerships, and maybe more of these acquisitions.
And close it up, Mitch.
Yeah, I think it's all about deriving value. So, at the end of the day, these PE firms are trying to find and maximize the value of these companies. In a lot of cases, it's taking them private and combining them with other entities that do, similar or complementary things that really enhance the value. We've all seen, assets in general decrease in value over the last year. And if depending on someone's outlook on what things look like in the next 6, 8, 9 months, 2 years, there could be, extreme value out in the market right now. And I think a lot of these PE firms are seeing that and kind of, really taking advantage of, what is a discounted market at this point, and then piecing together these, essentially the company version of these super apps to really have something that, adds some true value to the market.
Great comments there. As we think about PE, public-private, what's going on with capital and how that's being invested and deployed, how do you view this, positive or negative? And if one way or the other, how so? And we'll start with Todd on this one.
Yeah, no, I think it'll be positive, very positive. And just aligning, I think it'll be a lot of strategic partnerships, a lot of alliances that companies build, and developers, different fintechs that focus on certain parts of, like the micro app or the mini app. And they have a niche capability that's super strong, super powerful. So I think it's going to be very positive for the future for them to work together and stitch these pieces together to create value for corporations.
I tend to agree. I think it's a positive. Craig had mentioned, right, getting out of the domain of fickle shareholders and quarter-over-quarter earnings and results, I think gives an organization a chance to take a longer horizon look on what they're trying to accomplish, unleash the value that Mitch talked about, and ultimately bring together more value for end users, customers. So I absolutely think it's a positive.
I'm a fan of the free market economy, so I think it's a good thing. We've got checks and balances in place to make sure that there's, competition remains even after some of these consolidations. So at the end of the day, we have to essentially have a level playing field between, public and private. And if, obviously more money comes from the private investors to take something that was once public, handing that money over to the former shareholders, I see, that being as kind of the core of our society.
I think it's generally positive. I think the other item to think about is, does this stop innovation with the consolidation? I think we've had that argument for a lot of years. Is there new developments of new companies, new technologies that can better activity, or are these just roll-up plays? And I don't think they're roll-up plays. I think they're roll-up in some sense, building larger networks, building connectivity. But the move to open and the ability for new companies to start is still strong. And that's probably the most positive thing, because that spurs innovation, allows for growth. There's, as you shift from one type of technology to another, a lot of things get undone, in that shift, whether it's a 5-year shift or a 20-year shift. But I think it's generally positive given everything else that's going on.
Thank you for those comments, and definitely view on my end, I think that PE has a place in the capital structure out there, and you need access to capital, and it's definitely an avenue to do it. They wouldn't exist if there wasn't a need. So moving on to new growth or consolidation, which will dominate over the next 5 years? I think, Todd, you may have made some comments earlier about this.
Yeah, I think we'll see tremendous growth, new fintechs further developing, but then we will see consolidation for sure, no doubt.
Craig?
I think it'll be more growth, and then, like Todd said, later on in the process, there's consolidation. It seems oftentimes as we approach the end of a tech cycle, where they're consolidating to eke out margin and economies of scale. To the extent that there's consolidation earlier, it's usually for building a broader economy or a ecosystem for organizations. So growth, then consolidation.
Mitch?
Yeah, I think it's definitely going to be growth over the next few years. And, I don't know whether it's going to be traditional consolidation where things will actually be combined, or if it'll be, really more of a partnership model to where these, new companies that are very nimble, flexible, and very open to exchanging information will work together and really build that ecosystem that Todd was talking about, to have something that's really new and unique that we've not experienced before in technology.
And Rodney, closing thoughts on that?
I think echo what you heard the panel say. I mean, Bottomline delivers a lot of products and services to banks. I think that's one industry you'll see consolidation, for example. But I maintain a lot of optimism that outside of banking, we're going to see a lot of growth still. I think that the rate of change technology is just going to continue to trigger that growth.
Yeah, I tend to agree with that. Appreciate the comments, public-private. I think it's something to keep front of mind as technology continues to advance and capital continues to be deployed to invent the new things that we're going to utilize down the road. We are going into our first speed round, and just a reminder, it's going to be one or the other. You'll state which one you pick, and then a quick rationale as to why. And Craig, we're going to start with you, and I think we'll just go ahead and start with you each time and bring it back down towards me. That way we don't have to worry about the order, and you could get to go first versus last this time, Craig. So the first one is around APIs now and in 5 years. As you think about this, are APIs first, or is it all the above, every connection method?
Now it's all of the above. In 5 years, it'll be API first because it'll be more widely available.
APIs, the streaming, not so much. Certain applications, but APIs.
Definitely API first. When you think about new deployments and new projects, they're definitely looking at first the new technologies and then leaning on those older technologies to kind of backfill where they may not be quite there yet.
And Rodney, close that out.
Yeah, in terms of where development focuses are going to be over the next 5 years, I think it's API first. I think the other channels are more mature, so I don't think that are going to be ignored. But when I think about where, for instance, Bottomline is going to focus our efforts, our development efforts over the immediate term, it really is going to be an API first position.
Great, thank you. Which do corporates have the most familiarity with, and which will be more transformative, SaaS or PaaS? Craig?
More familiarity is definitely SaaS. That's been around for 20 years, even though we called it some different things. Definitely more familiarity with. I think SaaS has transformed much of the world. I mean, you see the movement of ERPs into a SaaS world, but platform as a service will be more transformative. This is at scale, massive big data computing that will have a bigger transformation than the move to the cloud.
Yeah, more familiar with SaaS, but I'll take a pass on this question. No pun intended.
Nice. Mitch?
Yeah, I would have to agree. I think, SaaS is got to be the more familiar, technology because, we've used it, over the last 10, 15 years. But I would agree, I think, with Craig. I think over the next, future years, I think product as a service will definitely be more transformative to the market.
And Rodney?
No dissent here. I think SaaS, much more mature offering. I think much more familiarity in consumption, and certainly platform as a service, PaaS, is going to be much more transformative over the next 5 years because there isn't a mature adoption yet.
And you can start with someone else, move it the other way or whatever, but I don't mind going first. But
You get one more first, and that's it. Next one, Craig, this will be to you. Again, familiarity, transformative, APIs or streaming?
APIs are definitely much more familiar. This idea of streaming or orchestrated workflows is still fairly early in the IT world, and it's certainly really new in the business world.
Todd?
Yeah, I think it's going to be APIs. I see a lot of benefits with streaming, but I still think, streaming for real time, but APIs, I mean, you're going to have data lakes and whatnot, so you have the warehouses, but APIs is stronger, especially in the next 5 years.
Mitch?
Yeah, I would have to agree. I think APIs are definitely stronger, going to be more transformative. I think it gives, corporates what they've been looking for a long time, the ability to be proactive about retrieving data.
And Rodney, close that out.
Agree. Sort of the on-demand nature of APIs, I think, make it a much more favorable construct. Streaming is just a general broadcast. I think subscribing to that kind of general broadcast just means you really need to be able to consume and store then massive amounts of data. So I think the on-demand access or the on-demand nature of an API makes it a better technology for the next 5 years.
Great, thank you. Next one will be API for information reporting. When will it become dominant? Majority of banks and systems are utilizing it. And Rodney, we'll start with you and work our way down from there.
Yeah, I think that's probably a 5-year horizon, I'd say. If I think about sort of time frames, I think the next year, 2 years, really going to work through that standardization I talked about. Right, really needs to happen so that it can become, that we can see massive adoption. I think a couple of years thereafter. So I'd put that sort of in the 5-year bucket as when I'd expect to see that become the dominant consumption channel.
Yeah, I'd go a little more aggressive. I'd say in 2 years, I think it'll be the predominant method of connectivity. I think the big, large, global multinational banks are already there as far as their information reporting APIs and things like that are concerned. And that's where most of the value is going to be derived, is from your global partners, where you have the most volume, the most activity. So I think soon we'll see that movement for a lot of companies to APIs as the predominant method of connecting for information reporting.
Todd?
Yeah, I was going to say APIs, you mean we're not already there? APIs is here if you don't have it. The banks, and I know banks that don't have it, but you don't want to become the blockbuster, right? So they're going to have to step up the game really quick, and I think that's where fintechs that know APIs are going to be extremely valuable partners to the FIs and to everyone else.
So it sounds like we got a little diversity in thought here, Craig. What do you think?
Yeah, I would say the trillion-dollar banks are pretty much there. We're within a year of them having, heavily built out, and they'll continue to build out. As you move downstream from there, I think it's going to push out to 7 years, because you have to change your underlying operating system, your underlying banking system, which many are planning to do. And that's if they're planning on doing it 5 years, you have to add a little bit of time before that changes. So dominant within 5 years, but much more of a full build out in 7, because as you get down to the under $100 billion banks, they're dependent on the platforms that they run on.
Great diversity of thought there. We're going to move now into which matters more. We'll have 4 of these, and this time we'll start with Mitch and work our way down towards Craig, and end with Rodney on the first one. Speed or information?
I'd have to go speed. I think having the ability to have something on demand when you need it is critical to decision making. So it's a tough one, but in my opinion, I think I'd have to go with speed.
Great. Todd?
There's not a right answer to that one, but I'll go with speed.
Craig?
I'll go with information, because that's the content, that's what makes things go. So 70-30.
One or the other, Craig?
Information.
All right, let's have a hung jury. Information. I agree. I think getting at the data, having the data is incrementally more important than speed.
Outstanding. Next one is information or cost, and Todd, we'll start with you.
If you're worried about cost, you're in trouble. So it's got to be information. And I was going to say accuracy on the last question. So accurate information.
Yeah, I'd go with information too. That's worth the extra cost. I mean, within reason, but certainly information.
Rodney?
Information. Yeah, I agree. I think if cost becomes the primary driver, you're probably solving for the wrong equation.
All right, great. This is definitely helpful. Mitch?
Consensus on this one. I'll go with information too.
All righty, unanimous. Information. We're going to move on to the next one, and Craig, will have you start on this one. It will be cost or visibility.
Visibility is a form of information, so I'm going with visibility.
Go ahead, Rodney.
Visibility. I agree. I think that needs to be the focus for an organization to be successful.
And Mitch?
Yeah, I see visibility as kind of a combination of information and speed, so it's critically important.
And Todd?
Visibility. If you're hung up on cost, you've got bigger problems. I mean, you're playing defense. You're playing not to lose instead of playing to win and playing to be innovative. So, yeah, you can't worry about cost.
All righty, great. Last one, we'll start with Rodney, work our way down towards Craig. Flexibility or cost?
Flexibility. I guess we've got a theme here. Again, it's similar to the previous questions. I think flexibility is going to be more important. You don't want to create a rigid infrastructure that doesn't allow you to grow and respond to opportunities.
It's got to be flexibility. We've been in rigid infrastructures in Treasury for way too long. I think the flexibility that APIs offer is going to be key to our growth going forward.
And Todd?
It's not the strong that survive, it's the most adaptive that survive. Flexibility, number one.
And Craig?
It's going to be consensus there. If you think back, my view would be different maybe 10 years ago, where flexibility would be really, maybe 15 years ago, really expensive. Now it's not, and it's far better. And so the equations are too close, and so flexibility.
Well, great. Cost didn't win out on either of those three we just went through. Got one last one. Cost is not involved in this one. It's scalability or flexibility. Scalability or flexibility. And Mitch, we'll start with you.
I think scalability is going to be key, because you've got to have something that's not just usable today, but it's also usable, as the company scales. So I think that's, slightly more important than flexibility.
Yeah, so I would say scalability, like Craig made a great point, with all the new innovation and the new, it's a lot more easy to be flexible, so scalability is must have.
I'm gonna go flexibility, because we need to be able to adapt and just hope. That doesn't mean that there's no scalability whatsoever, so I'll go with flexibility because we need that for analytics and just to be different.
And close that out, Rodney.
I'll let Craig be different, then I'm going to go with scalability. If one's at the cost of the other, I think you need to be able to scale, right? If you have a solution that doesn't get to the right scale, how valuable really is it? So again, if I've got to be, put in a corner, it's going to be scalability over flexibility.
Well, that was a great speed round. We had some similarity thoughts, and we had some diversity in thoughts. So that was a nice speed round. We got one more coming up in a little bit, but we're going to move now to newer tech and talk about APIs and embedded payments. So for APIs, what is happening with API adoption? Is this vaporware? Is it progress in the right direction? Will it soon take over the space fully? What are your thoughts on this? And Mitch, we'll start with you.
Yeah, I think when it comes to APIs for payments, it's definitely here and it's now. So as far as where it sits in the market and how mature, I think, obviously APIs are built for, one-off payments primarily. But we will see in the future where those bulk payments and things like that, we've already got banks and things like that are building out their bulk payment APIs to be able to take these huge volumes and things like that we're seeing across organizations. So APIs are critically important when we think about these new payment rails that are being offered, like real-time payments and things like that just don't make sense in a file-based world. Why would you even leverage a real-time payment if you're then writing a file out to disk that then has to be moved across servers? It's no longer real-time. The true value of the real-time payment is knowing that your recipient has received those funds the second that you push that button to send them. So that level of confidence that the real-time rails, that the API rails offer, is something that we've kind of been clamoring for a long time. Timeliness, certainty of payments that in a file-based world we just can't truly achieve.
Thank you. Craig, thoughts on that?
So API adoption is good. It's usually when we take a lot of surveys and do a lot of research, usually there's a pretty heavy discount on what people plan to do and plan to adopt. And APIs are well ahead of the adoption level that corporations expected. They expected to use it at a certain level within 2 years, and within a year, they'd surpassed the 2-year mark. We don't see that. Besides, machine learning keeps up with it. APIs have surpassed it. So it's not vaporware. It's usually being delivered through systems that are incorporating it, so people are turning on functionality, just like an app on your phone, they're turning on. So it's not vaporware. It takes a while for technology to move through the funnel, but definitely not vaporware.
Yeah, Rodney?
I would agree. I don't think it's vaporware at all. I think it's definitely progress in the right direction. I think for the same rationale that Craig just mentioned, I think the legacy technology that doesn't take advantage of those APIs is going to stem or stunt some of the adoption. But I think it's we're on an inevitable path. I expect us to get there.
And Todd, close that one out.
Yeah, so the super app and embedded finance and all the business opportunities that brings, I think APIs. I mean, it's a must have, and must utilize technology.
And just one more thing on the embedded app is, as you brought up the super apps, and if we look at where do people want to do business and transact, embedded APIs. I need the information where I need it. I want to transact where it's most convenient. So it's not always within an ERP. It's not always within a TMS. It's wherever I'm working to do it. And just like getting out of the ride share, you don't care about the settlement and the payment and the receipt. It should become less, and the experience or the activity becomes more. And I think that's where things are heading. It's why are we talking about payment so much? It should be more seamless and minimal. And if we can do that, then we've achieved quite a bit.
Craig, you clearly don't care about your receipts anymore, do you?
It's gotten a lot better because I lost so many receipts. I would get in much trouble with the accounting.
Excellent. Appreciate the comments on that. Next question is open banking API embedded treasury. How will embedded treasury payments unfold over time? Over what time frame? And when we think about this, we're going to think about reporting and payments. Reporting and payments. Yeah, this one we'll start out with Rodney.
In terms of timeline for adoption or mainstream adoption, I think we'll see a much shorter ramp on the information reporting piece. I just think whether it be that visibility into account balances, transaction activity, that's an immediate pressing need. I think the convenience of experience in terms of embedded payments is certainly going to be a driver and motivator. I just think there's some more complexity there that's going to put that on a longer horizon. I'd venture, again, within 5 years, we'll see API consumption for transactional information reporting to become the dominant consumption channel. I'd expect 2 to 3 years thereafter, the dominant consumption channel for payments.
I think the open banking APIs are not necessarily, applicable to this group particularly. They're more directed towards, consumer use cases. And in a lot of ways, that's somewhat stunted the development of, APIs for some of the large, European banks, because ultimately they had to spend time on regulated APIs that they had to adhere to in a timely fashion. So I think I agree with Rodney. I think from an information reporting API perspective, even those banks have caught up as far as their offerings for premium corporate APIs for balance and transaction information that Treasury can use independent of the rest of the organization, and then allow the rest of the organization to figure out how they're going to leverage that real-time data, whether it's for real-time reconciliation, some kind of forecasting, FP&A, whatever it may be. And then the payments is a little bit more challenging to kind of unwrap because there's so many different parts of the organization that leverage payments, and being able to, migrate whole hog from these other file-based instructions that they're sending from multiple different locations that IT is maintaining, and in a lot of cases, band-aiding together, migrating those to API payments from all that disparate, system infrastructure that you've got is challenging. So that's where, we see a lot of people that are taking a very, start small and then grow with the solution approach, starting with, really reporting, integrating that, and then, integrating small scale payments across the organization gradually, because, a lot of your major global banks, particularly those in, the US and Asia, have, fully baked payment offerings as far as via API that give you, real-time acknowledgments, real-time response information, payment tracking, and things like that that are, innovative in Treasury. So,
And Craig?
Couple of thoughts on that based on the conversation. What's going on with APIs globally? If you look at the use in Europe, it outstrips the U.S. heavily. It used to be we were only embarrassed about how many checks we had, but we're falling behind on the API front, which is an embarrassment. We're at the AFP in Philadelphia, and we're behind there, and so we can't catch up. We're also behind on the faster payment schemes. If you looking at the UK again, they have higher volume than we do for same-day ACH, a country that's almost 5 times as large. So we have some catch-up to do, but we can see where the path is, the adoption of tech, and some of our European and Asian, colleagues, what they're doing. So a lot of room to grow. Information reporting and payments, the API use is going to push these along faster, and so we have a template of where we need to be.
Todd, closing thoughts on that?
Yeah, so I've had just last night some great conversations with some bankers that are. So I would say the banks, we may not know it, but they're out there and they're working hard on this very thing. So again, I think it comes back to, are we talking about the near side or the far side? And I think that's where the near side is a lot of opportunities for all of these fintechs that we're used to working with. On the far side, I think that's where the banks want to play in those payment rails, and so distributed ledger technology, aka blockchain, was around $16 trillion worth of flow in 2021. So it's not the biggest, obviously, but it's developing rapidly in the payment space. So I think if we're talking about the near side, it's really going to be multi-channel, but we won't see it. We'll see there'll be multi-channel, multi-payment rails on the far side.
Great, thank you. We are to our final speed round, and then we'll have some closing remarks. So we're almost done, almost at the end of the hour as well. So speed round, you must make a choice, one or the other, and state why you choose that. First one is fraud detection. What will be the bigger risk over the next 3 years? And we'll start this time with Rodney and work our way down. Diversion or email compromise? Can't read my own writing.
I would say diversion is going to be a bigger impact on risk and fraud. I think it's a broader construct than just email compromise, so I see it having a broader impact.
I think email compromise ultimately, because I think just the number of users and things like that you've got to worry about and monitor is large, and a lot of those people are not actively monitoring those email addresses and those email inboxes. So I think just given the user base, I think the email is a bigger risk.
Todd?
Both, but I'll say diversion, just because I think we've done a lot of education and we've put a lot of safeguards in on the emails. I mean, that doesn't guarantee anything, but really I don't think is the right answer.
I'm going to go with payment diversion, redirecting payments through any method, largely because of the categorical structure that our first panelist said. That was pretty convincing to me.
Okay, next one is email compromise or social engineering. Rodney?
In comparing those two, I would say email compromise. I think it just because of its use, its commonality, I think it just there's a greater likelihood that could be cause for risk of the next 5 years and just social engineering itself.
Mitch?
I have to go with the same. It's somewhat of a personal answer. I recently got an email attack, so it was unsuccessful, but still. So.
Todd?
I probably want to go, I'll go with email. I mean, I've recently got emails from our CEO about making payments to my work email, and then I also got to my personal email from our CEO, and they were very convincing.
And Craig?
Generally, I'd say business email compromise as well. We're into this so heavily for so long, and it's not letting up. They're just getting more and more sophisticated. Defenses are definitely picking up. I'll stop there.
All right, next one is social engineering or ransomware. Rodney?
Comparing those two, I think ransomware will be the bigger threat over the next 5 years. You just continue to see more and more sophistication from fraudsters out there. The landscape is as fast as technology changes, fraud and risk changes. So I think ransomware is what we're going to see. Again, comparing those two, I think ransomware is the bigger risk of the next 5 years.
And Mitch?
Yeah, I would agree. I think ransomware, the people that are designing those are, some pretty smart individuals, the way that they do it. So I think, as long as, there's payoff on their end, they're going to continue to kind of innovate on that side. And we're just going to have to get better at informing, our internal resources and trying to protect against it as best we can.
And Todd?
So only God knows how much ransomware has cost us. Definitely ransomware.
I'm not going to say I was multitasking or I couldn't hear you across the Zoom meeting, but what was the other one besides ransomware?
Social engineering.
Ransomware. Yeah, ransomware.
Alrighty, last one in this series is vendor fraud or wire fraud. Yeah, Rodney?
Vendor fraud, I think, will be a bigger risk over the next 5 years. More ubiquitous, right? Not all vendor payments are going via wire, so I think it's sort of a volume play there. I think that's where you're going to see more risk just because there's more volume.
Mitch?
Yeah, I think that the vendor fraud, just because it's so hard to control. I mean, you're processing thousands of invoices as they come in, so being able to sort out which are real and which are potentially fraudulent it's a Herculean task.
And Todd?
Vendor fraud.
So I'm gonna go with vendor fraud for number of transactions, but wire fraud for total value lost. Just because of the vendor fraud has significant payments, but when you can get access to a system and send payments out, that's where I think our biggest exposure is, gaining access to systems to do that, not the vendor change. So I know that's a hedge, but it's vendor for one, vendor for count, wire for value.
All right.
You like that? They want to make some adjustments to their comments.
I just want to play by the rules. That is answer two.
He did answer two. It's one or the other, right?
Wire fraud, because I'm about amount.
All right, great. Now we're on our last question. What will impact Treasury operations compliance the most over the next 5 years? KYC or Dodd-Frank? And Craig, we'll start with you and work our way down this way.
KYC, because 60%, at least 60% of people identify that as a major issue and headache compared to the other ones, which were under 20%. So I'm going with the popular count there.
And Todd?
KYC, but not know your customer. It'll be KYC, know your counterparty, especially with the distributed ledger technology and blockchain and those. Yeah, it'll be know your counterparty, because that's where a lot of people have lost a lot of money already by not understanding the counterparty risk.
I think the KYC documentation, because we see a number of wants and needs as far as in the EBAM space, and in order to really facilitate those kind of real-time EBAM communications, you've got to have a really robust way to store your KYC documentation.
Yeah, Rodney?
I'd also say KYC again. It's a more prevalent, I think, dynamic, so it's going to be more impactful.
All right, next one is FBAR or Basel III or 4.
I'll go with the capital adequacy issue, because it's more related to liquidity. FBAR has been around for a while. People are slowly getting their hands on that. So capital adequacy.
Basel 3 or 4, just collateral in general, with the way the economy is going right now, and the euro dollar system, which is US dollars offshore, not euros, but US dollars offshore. Just the total lack of a grasp of what M2.
Mitch?
Yeah, Basel III.
And Rodney, close this one out.
Would also agree Basel 3 and 4. I think there's broader implications.
Outstanding. We got two left here. Next one, Craig, PCI DSS or GDPR?
PCI DSS, the payment security programs, whether it's because it's related to payments versus email and permissioning.
I have to answer payment security. I think it's core to what I do on a daily basis, and I think there's critical value there.
And Rodney.
Would agree the implications of payments, I think, make PCI DSS the bigger variable.
Okay, we came to our very last one now. OFAC sanctions or FATCA?
I think FATCA, because it's much harder to get compliance there, and OFAC is easier to implement, is becoming easier to implement as you streamline and consolidate your activity.
Todd?
I think FATCA, because for the reasons kind of Craig pointed out, OFAC, I think we've got pretty robust engines as far as being able to check fairly dynamically. And I think with, the world environment as it sits today and potentially those regulations potentially being fluid and changing periodically, I think being able to, keep up with knowing that you're in compliance and being able to kind of check those things with some of the technologies we've been talking about today. So being able to on demand go out and make sure that you're in compliance, I think is important.
And Rodney?
Being the U.S., I think OFAC will be a bigger dynamic here for us in the U.S.
Well, I want to thank you all very much. I really look forward to seeing what happens over the next 5 to 10 years with Treasury technology and what's going to happen. Thank you very much again for being on the panel. I'll give you a minute here for any closing thoughts, if any of you have any closing thoughts. If not, I thank you very much.
Yeah, thanks. I'll start. I know everybody's got something to say, or I hope everybody has something to say. The idea that we continue to shift in technology and make jumps, leaping over the chasm in different areas with compute, information, how we operate. There's so many things that are going on now. It's that idea of figuring out where we're going and making sure every move you take moves you in the direction of the newer tech is vital for efficient treasury operations, managing the risk profiles that we have. I don't think there's been a more important time to pay attention to these changes because they're changing in almost every single sector of tech. And so since we're talking about treasury tech, that would be my charge and challenge to stay current.
Yeah, I would say stay current is mission number one. What I'm really interested in right now is really the Web3. So like Craig was talking about earlier, it's easy to, and I've set up a data lake too and bring in technology. But again, did you mention Amazon or Webs?
Azure, I think it was.
Oh, Azure. But again, we're talking about data centers and servers that big companies own. So as Web3 comes on and you have your data and it's all encrypted and secured, but it's distributed, decentralized. So it isn't one single big monster company that owns the servers that your data resides on. It's decentralized. And so that I think will come on a lot faster than what we realize. And it'll be very interesting to put a spin on things.
I guess I'd like to applaud everybody for coming to AFP and continuing to kind of educate yourself on new technologies. And I think to continue to do that throughout this next couple of days and go out and talk to people about these new technologies that you can really leverage in your day-to-day, because it's one of those things you don't have to do it large scale out of the gates. It's something you can start very small, because there's from what we've seen, there's definitely benefits to being early adopters from a cost perspective. Your banking partners are looking for people to leverage these APIs and really start to see some of the value out of what they've invested a mountain of money in. So it's one of those things that if you start small, start today, you can get in at the ground floor and even potentially have some impact on how the banks are providing this information.
Yeah, I would just say really exciting times in front of us. You ask, what was maybe the single biggest, trigger technology? It's, I think about, take the question, think about the combination of all the technology changes that are in place or in play here over the next several years, whether it be APIs, machine learning, cloud computing. I just think the combination of all those technologies is just gonna make for incredibly interesting innovation that simplifies, what a treasurer needs to do. So I think it's really exciting times in front of us.
Well, outstanding comments. I want to thank all you for coming here to listen to our panelists today. I hope you walk away with some things to think about and consider. And thank you very much.